It's time now for your business. Last day of the trading week, and we can check in on stock markets out in Asia. Indices, a mixed picture at the moment. The Kospi out in Seoul up 0.1%. Meanwhile, trading down below the flat line, the Shanghai Composite and the Hang Seng in Hong Kong. Only the Nikkei out in Tokyo up in the green, up 0.5%. Shanghai Composite down. Now, this comes after China also saw its worst economic growth in 30 years. Now, that coming amid a bruising trade war with the United States and sputtering investment. More stimulus steps are expected this year to help avert a sharper slowdown. Fourth quarter gross domestic product rose from 6% from a year earlier, in line with expectations. This year is crucial for the ruling Communist Party to fulfill its goal of doubling GDP and incomes in the decade to 2020 and turning China into a, quote, moderately prosperous nation. Now, a day after the U.S. and China signed their long-awaited trade war, the U.S. Senate has overwhelmingly approved another major trade deal. Senators voted 89-10 in favor of the U.S.-Mexico-Canada Agreement, or USMCA, which was negotiated to replace NAFTA. President Donald Trump is expected to sign the bill quickly into law. The agreement addresses issues like labor costs, digital trade, and copyright rules. But critics say it falls short on dealing with climate change. The American president hailed the progress made this week as historic.
We are very proud to have that. So we've done two of the biggest trade deals. They are the two biggest trade deals in the world ever done. And we're honored to have done them in a short period of time.
Well, a decade after the financial crisis, the global economy remains sluggish, and trade and geopolitical tensions could further derail recovery, the UN has said. People in a number of countries, mostly in Latin America and sub-Saharan Africa, will see their incomes stagnate or decline this year. The world economy expanded by just 2.4% last year, its slowest pace in a decade. Sam Bradpeace reports.
More than a decade on from the financial crisis, the global economy remains sluggish. Over-reliance on monetary policy, high debt levels and stagnant investment are to blame. This was the UN's latest assessment.
Quite a large number of countries will actually see stagnation or decline in per capita incomes this year. And you can see where most of them are, Latin America, and predominantly in Latin America and Africa, sub-Saharan Africa in particular.
Advanced economies are also expected to grow anemically, with the exception of Japan, which is hosting the Olympics in July. The UN cautiously predicts global growth to hit 2.5% in 2020, matching the World Bank's prediction, which was trimmed back last week. This uptick from 2019's 10-year low of 2.4% is conditional on avoiding worsening trade tensions and financial turmoil. The UN has warned that a prolonged period of historically low growth may set back the goal of eradicating poverty. It is calling for a policy mix that goes beyond monetary adjustments and says efforts to stimulate growth must be coupled with those to achieve greater social inclusion, gender equality and environmentally sustainable production.